show is sponsored by HiveMind CRM. It is more than just a CRM. It is a real estate and business mastermind that comes with an all-in-one CRM. You can have unlimited websites and users. You can call, text, RVM, and email all in one user interface. And you can set up custom automations for any type and multiple businesses. 65% of companies start using a CRM system within the first 5 years of business. Once implemented, the HiveMind will save you on marketing, give you more time, and make more money. One of our users had his first $100,000 month using our system in June. We want to see you automate and accelerate your business. Text us at 210-972-1842 for future meetings and, of course, to get our $1 course on how to make more than 6 figures on one land deal. You can schedule your free demo today at hivemindcrm.io.
All right, happy Monday, y'all. This is the Hive is live meeting today. We have Shahriar again covering more commercial stuff. Commercial is complicated. It is very complicated, but Shahriar breaks it down in an easy and not even easy, but it's understandable way. He's doing a demonstration for us and doing different setups for us. So I hope you guys get a ton of value. Shahriar is here again to do 2.0 on part two of commercial. But we talked a lot about last week. If you guys didn't hear last week's, it was a great call. It should be going live this week, I think Thursday. So check it out. But check it out, man. There's a lot of value you can learn, and hope you guys learn a bunch about commercial here. This isn't like stuff you can use now if you're not at that level, but it's just stuff you can keep an eye out for in the future and what it looks like. Right, Shahriar?
Yep. And if you don't know, just raise your hand and tap in the right set of people. They will do the job for you.
That's it.
Right. And that's the beauty of friendship and relationship, right? I've written down on my wall is that real estate is an extremely unfair business, extremely unfair. And we create the unfairness with the relationship, right? I mean, we all know that sometimes we got to sell, we're stuck. One phone call, one text, boom, a buyer shows up and it's done in 5 minutes. It's unfair. Okay, I'm sharing my screen. Can you all see my screen?
Yes.
Awesome. Okay, so I had the agenda from last week. And then I'll kind of recap real quick, then we get into it. Again, absolutely here. Please ask me questions. I'll tend to talk a lot and give a lot of information, but wherever that you want to go to sidewise, just let me know. I'll take a pause. We'll answer your questions. So please do not feel shy about asking questions. All right. Quickly, I think at the rundown, quick about me. I have a wholesale team. I'm an active buyer. I buy everything extremely on the wholesale channel, and I buy land, commercial, triple net stuff, and apartments as well. I've been in the business for 4 years now. I bought a little over 180 properties, roughly $12 million of equity that we deployed. And so I am extremely comfortable and working in a channel, just like you guys. I do text, I do call, we do yellow letter marketing, everything aggregates to it. And do I take a look at it? It's a team. Absolutely team effort. Yes, I can buy 5, 6, 7 properties all by myself and go to the entire value chain. But the fun begins when I start sharing, when we start talking to people and building a community. So that's quickly my company is Cedar Equity. You can take a look at it. If you have any questions, just let me know. I'm in Texas market. I started looking at the Colorado market, and after I touch the Texas, Colorado, I'll walk into the Arizona market. That's my playground. On that note, I think we talked a little bit about the asset class and the asset categories. I will recap that a little bit. Then we talked about building a team. I'll get to it very tail end of it. And we also gave you a very high level market location kind of sort of thing. So I'll start with the market first. Then I'll walk you through the rule of engagement with seller, because, texting and a land versus a house versus a triple net versus apartment is slightly different. Then I'll give you some valuation methodology, like stick your thumb on the air and see which way we're deploying, something like that, just to kind of get you started. Also, it is important because, so think about this way. We want to rely on the team. At the same time, we don't want to dump all the work on the team. So if I call Daniel, I got a property, that's the address. That's one thing. Or Daniel, I got a property, that's the address, and condition 1, 2, 3, seller is asking for ABC. What do you think? That's different. Right? We want to be cognizant about each other's time, how that plays into that. Then I'll recap building a team. All right. So understanding the market, you can Google it. You can kind of sort of see where we at. So especially, it doesn't quite matter when you. Oh, no, sorry, it matters for everything, but on the commercial, it really matters because we are really tied up to the macroeconomic condition. Before the war, there was one kind of inflation. After the war with Russia, there is a secondary, inflation that kind of kicked in. Now, Fed said they're going to increase the rate to, deflate the inflation. Now, inflation goes high, they got to go fast, right? So that has to be, factored into your pricing because again, we are doing a lot of loans, right? And on the loans, it's not like residential that you take one loan for 30 years is fixed. On a commercial space, typically it's a 5 years balloon. So every 5 years you got to refi. All right. So you're always open to the market. So you always ask yourself what's going to happen to interest rate 5 years from now. It's going to change. It's going to eat my revenue. How that's going to go, right? And then you also got to know your local area, right? From a residential side, we have some neighborhoods, it's cash flows. Some neighborhood, it appreciates, right? The same thing applies for the cities. Some city are good for cash flow. You go Cleveland, Ohio, you go Milwaukee, it's all about the cash flow. 2% rule, 2.5% rule, 3% rule. I get floored every time I think about those numbers, but they don't appreciate. You buy that thing $100 today, it's gonna be $100 5 years from now. Versus you buy something in Austin, no cash flow, maybe zero cash flow. Right?
So you can't get long-term debt on this?
It depends on the market and depends on the property. So in a commercial, you get a long-term debt, 25 years amortization, that's your typical thing, not 30. The term is there, but it has a balloon payment. So every 5 years, you got to get out and refinance the property again. So imagine I bought something 2 years ago for $100,000. My PITI, lack of better words, is $1,000. My rent was $1,200, right? Now my interest is high. So for same $100,000 property, same $1,200 rent, my PITI is $1,300 or $1,200. I'm not making money, all right? So on the commercial, you really got to see it. So it's a little bit more broader term. Now, in my mind, commercial is 5 units or higher. Anything has a triple net basis on it, right? So that's why understanding the market cycle and at least getting a pulse. You don't have to know everything. Just understand there's inflation, higher interest rate, right? And I got to factor that in my calculation. There is a price going up. It's not going to go up. It's going to go sideways, something like that. So that helps. What really matters though, in your city, not all cities are made the same, right? Just in Texas, I'll give you an idea of it, right? Now this setup of the rules that follows through everywhere. Just like every city has their own subsection of the neighborhoods. In a state, every city in general got their pulse. It becomes matter because it's a larger asset you're buying. So in the state of Texas, Houston in general, based on what it is, it's a slow-moving economy. It's not a boom. It's not going to go up. That's also because it's oil and gas heavy. Dallas, it's a higher than average, I would say, appreciation compared to Houston. That's also because in Dallas, because of the U.S.-China decoupling, a lot of the high-end manufacturing is going to Dallas. So if given all the things, if you invest $10 million in Houston versus $10 million in Dallas, then you should get a better return in Dallas from the city perspective, right? And Austin, it's a firecracker. It's like California. It's you buy something, you barely buy it. You buy it, wait for 6 months, price goes up 20%, 30%. So that's the idea. So getting to know your market, getting to know your city, getting to know what pockets of your city is important. That's what it is. If I have an apartment in Dallas, I'll get the most amount of buyers or sellers looking for it. If I have Houston, second best. And Austin, not everybody can play because pockets are tiny. It's expensive ticket items. So as you look at the properties, you have to see that my commercial property is in the good neighborhood, is in a good looking building. Do you think people who are driving a Mercedes will show up or a pickup truck will show up? Because that's where the money is, right? That's where the rent is, and that's how we take a look at it. So understanding the market is very important when you go price with that. And the last thing is financing. Not every city is made the same. We'll find a lot of people on a bank will loan on Dallas property, Houston property, Austin property, but they're not going to do it in Oklahoma. You can flip a land in Oklahoma, no big deal, 50 grand, 100 grand, but only ask for a $7 million loan. Oklahoma City is too small, or state is not too big, right? State doesn't have enough economic buying power, so rate will be different. So that's why it's a slightly different. Let me take a pause. Does anyone have any questions?
Yeah, I kind of have a question. So smaller cities, and this is where I think the power of local banks come in. So if you're in a smaller city, you might have to work with a local bank to get a local loan, just because the institutional banks will not lend because they don't have enough. They're not big enough, right?
Yes, and then last part is you got to have relationship.
Yeah,
they're gonna trust
that
you
makes
less.
sense. That makes a whole lot of sense because, like you said, if you're in a smaller market, the only people that will, that makes a whole lot of sense now. But if you're in a big market, you can get money from a lot more places, so you're a lot more lendable. Right. That makes a lot of sense right there.
And the smaller we go, you become more and more and more and more and more important. The further you go, or the larger area that you go, asset becomes more and more and more important, right? And because if you go to a little place, I mean, like, I don't know, somewhere in a smaller town where they have to trust that you can turn things around, probably you'll be taking the most amount of loan from the bank, who knows, right? And unless you have pre-established information, that's also why the clientele of the buyers becomes slightly different, right? So that's, any other questions?
Go ahead, DeAndre.
Hey, Shahriar, it's DeAndre. I have a
man.
question. Hey, how's it going? I had a question. So about I definitely understand what you mean about certain markets that don't appreciate. Like some markets are strictly like cash flow. Like you buy it up for 100 today, it's going to be worth 105 years from now. I'm okay with investors in markets like that, obviously, as long as I get them for a discount and the amount I put in doesn't put me way over what it's worth. But what are the super downsides of markets like that? Like you said, like Milwaukee and some parts of Ohio where cash flow is good, but appreciation is nowhere. So what are some other downsides of cash flow markets?
Got it. So I'll give you the answer two ways, right? One way is you're buying one house or two houses or three houses. Typically, that's what a lot of people will do. They'll buy 10 at best that they'll tap out. And then I'll give another answer as if you're building a business, right? So one thing, what everybody say, we kind of sort of like the cash flow, we're going to replace our revenue, all this other stuff. For me, it sounds cool. It sounds great. We all have to start at some point in time. I started the same way. But what it boils down to, cash flow typically will not make you what you want to have in real estate. It's when you sell, take the equity out, that's what's going to make you rich. Because if you buy, let's say, one house, you're making $200. So let me word it out. You're going to buy one property, take a loan for 20 years. You're going to go through the whole rental process, and you're going to have $200, $300 after all expenses cash flow. And DeAndre says, you know what? I don't want to have, I want a $10,000 a month of rental income. You got to have more than 30 houses. Once you have 30 houses, it's a goddamn business. Every single day, somebody's going to call, you can have it. So you got to have a team. You got to have a structure. You got to have your own management company to have 30. And or you bake yourself in. So as an individual buyer, it's fine. You're having a W-2, whatever that you do. You're looking for a side hustle to make another $2,000 to get you a vacation every year. Fine. Buy 3 houses, you'll make the money. 4 houses, you'll make the money. Cash flow is fantastic. But when you flip it back, that I want to make a $10,000 out of my cash flow, it is tough. That's the biggest downside of the cash flow type areas, right? And appreciation, you have it, you barely make it through, but you have it for 5 years, your equity goes up high, right? You make a big bang that way. So, but I mean, it's a normal. It's like a process of growing up. Everybody goes from there. They look at their backyard, they look at their pocket, see how much you have, and then you go to the areas where you can buy. Once you get comfortable, build a little cash flow, then you start high grading, right? So it's a cycle of process that everybody goes through. Did that answer your question, Daniel?
Yeah, it does. I understand.
So for your case, man, you got to buy tons, right? Keep buying, scale it up. And then you get out because you started, right? You started. So buy as many as you can, just stack it up, push yourself high and extremely, like make a big pool. All of a sudden, little bit of cash flow, but when it's stacking up 10, 20, 30, it becomes a meteor one, and it can sell somebody as a portfolio, or somebody can come in and really buy it as a portfolio, right? So if you're going to cash flow, fine. Don't go for 2 or 3 or 4 properties. Go for 10, go for 20. Anybody else? Good question, by the way. I like it.
So let me kind of dig a little deeper on this one too. You said you have to have, once you get over 30 properties, you have to have a team in place, because it's not just you and your assets. It's how are you going to get more assets over 30? Is that what you're saying?
No, I'm saying statistically, if I run a number, like my rule of thumb, is that once you hit that 7, 8, 9 properties, then it becomes a full-time job almost.
Okay.
Either you do the time or you pay somebody else to do the time.
You have property manager, you might have a
Yes.
The property manager helping with the repairs and all that stuff. It's going to get crazy.
I mean, somebody else putting the time in. Either you buy it or you do it for free.
Yeah, gotcha. Makes sense. Thank you.
When you hit the 30, I mean, you got 30 rents coming in, you got 10 days of thing, AC is that, and you got to have a team in place. But again, understand that not everybody will think it through have 30 people managing the whole thing. It's a bigger process, right? So just because I'm saying it, it may not be applicable to a lot of people. Just to kind of share with you. All right. So I'll get to this part of it. I think this is going to be a meaty part. So we all do text. Mostly here at HiveMind, we do text, right? And ringless voicemail, not that many calls, right?
We have a mix of everything. Majority is text, I would say, but we do have people that use it for cold calling.
Got it. So I'll give you how at least I approach it. Take with the grain of the salt. I want you guys to test it and see what happens, right? Not everything is perfect, but that's a way to get started. Then you spin your way, make it more better, right? So what we do on a land, less than 50, 60 grand, 100% of the offer goes out to text. It's a stupid land, right? There's none to it. If you want to sell, don't want to sell, fine. On a house, we try to show up at the property and negotiating happens at the property. But before we go, we get a pulse of the, property, right? And yes, we could do on a text, on a call, but we have seen better results, better conversion when you show up at the property and offering and working in front of the seller. On a commercial, all the text that goes out, all the first call that it goes out is nothing about the property. It's nothing about the seller. It's all about us pitching ourselves. All we want to know if you want to sell. So all we want to know if you want to sell. That's all. That's the first call. Just understanding yes or no. Then the second call happens. Again, on the phone, that's where we connect. And second call, we call it discovery call. Second call, half of the call we spend to give them confidence that we can buy. Other half is, can you show up at the property? And the third time we show up at the property. And before we go to the third time show up at the property, we give them enough information about us so they feel comfortable and gather information. So when the third call happens, we know that we're going to negotiate, right? Again, the first call is just to know. And I'll explain that to why. The first call and the second call is discovery, and third conversation happens typically on site. That's our sequence of it. Why we have the sequence of it? Because on the most of the commercial, I know we may have some unusual cases, but in most of the commercial, they have some sense. They're pretty sophisticated. Again, less than $500,000, maybe not, but once you touch the $1 million or higher zone, it's even though there could be mom and pop, unless something extreme happened, they have some idea what they want. At the same time, they want to know, can you buy $1 million product? Can you really drop off $50,000 on this money? So that's where your art will come in. So you guys are fantastic on text and you guys are fantastic on the phone, but can I play with it and the discovery call? The biggest conversion that we have seen, that discovery call, were we able to build the confidence that we have the caliber to buy whatever asset that we're going to buy. Because, in your mind, you got a property and somebody's offering $400,000 and they're saying, I'm going to close in 40 days. They're saying, I'm going to do it cash. I was like, how many people I know got that much money in their bank account, that much sitting out there, right? So play a little bit. And to me, that's the rule of engagement. Now, on top of that, we have almost all of us with the bigger team, we got VAs, right? We pay them what we pay them, between $4 to $8, right? Understand though, someone who's paying that money may not have the strength of making a $500,000, $1 million offer. They just don't. because you're making $1 million. It's a lot for me, a lot for all of us here. I mean, some of us here. But again, and if you go to Philippines, you go to whatever country that you go to, they're making $4, $5, $6 an hour. For them to even say $1 million, it's a big deal. At some point, I had 9 VAs. And one guy that I work with, he got 17 VAs. Man, you should see how tough it is, right? Because it's $1 million. Once you realize it, it's so in your VA team, understand that not everybody will be able to work in that channel. Even us, we don't know sometimes how to have $1 million conversation, right? And let alone the VAs. So we have seen a decent amount of issue with that. So rules of engagement for our team is all the, I want to go backwards. Conversation happens on site if possible, but 100% of the offer that happens for the commercial happens at the US local guys. And VIA will never make an offer on the commercial. Their job is just to get a yes out of it, then hand over to the local closing guy. And if it's big enough for them, in my team, if it touches $1 million, I am on the sidelines. I'll prepare our acquisition manager how to do it. If it touches about $1.5 million, $2 million, then he's going to hand me over and I'll come in. Right, so it's like a staging impact. So all of us here, that when you get a commercial antenna up, don't make an offer on the text. Get on a phone call, right? And then you kind of go from there. I'll pause here. Questions, comments, thoughts.
Is there and I think definitely don't make an offer on a text 100%. But I think once can you understand? Can you explain, like, because brokers, they kind of own the commercial realm unless you're really good at going direct to seller. What are questions that you may need to research and further to have a meaningful conversation with a commercial to show that you know what you're talking about? And and this is for everybody. Like, there's different languages for different asset classes, and same thing with real estate. Like if you're doing land, there's going to be info lots, there's going to be perk tests, there's going to be that whole different language. If you're doing single family, you're going to do short-term rentals, Airbnb. There's all these terms. When you get to commercial, you might do T12, NOI, like. Where can people find those basic terms just so they can have a long-term conversation with that seller or broker?
Sounds good. I'll walk you through. That's a very good question. That was my second one. But give me about 4 or 5 minutes. We'll jump right into it.
Oh, I didn't even know you're covering it. My bad.
No, that's awesome. That's awesome. No, this is absolutely right. Right. So those are a couple of 4 or 5 points you must remember, tattooed in your brain. Anytime touches commercial, automatically you blurb out 4 or 5 things. Works out perfectly fine. And I'll write it down for you guys. Very simple, right? And that's it. And so a couple of things, going back, right? When you have a conversation with seller, now all of us here, we work at the direct channel, right? Me personally, I don't touch any, and me as a first time underwriting it, I don't look at anything touched by broker. It's too money to buy. There's no point running a broker touched property. I love you guys, broker, when I sell it, when I lease up, when I rent it, but not when I buy it. It's a very simple way to put it out. I mean, hey, look, we all got to take up our business, right? You do yours, we do us. And that's the way I take a look at it. So automatically, if it's a broker touch, there's no point. Plus, if I'm a wholesaler, I mean, hell no, right? There's no point. And you may get lucky, but there's no point on top of there's no point, right? Because think about it. If I'm a broker, my job is to get the most value out of it. And I have my own network. Daniel gave me his property. I blast it out to everybody. Right? And then Billy shows up, he's a wholesaler trying to negotiate with me. What the Billy is going to get out of me, right? Because I already pumped up seller with the high price. And I'm not being able to sell it because of the high price. And good luck getting the seller down at lower price and going through me, right?
So
it's a slippery slope.
So looking for deals, do not touch broker deals.
Thank you. Unless you have your money, you want to go buy the broker deal, fine, touch it. But the channel that we work in, I love brokers when I sell and when I lease up. And I want to buy. And every time a broker shows up, I come to everybody in my team from the VAs will tell you, we'll take out the brokers, but the conversation happens directly between you and I. They will take a chair, they'll be on the sideline. Very simple. I'm not going to talk to the broker to seller. It's just not going to happen in my team. When we walked the property today, seller said, I got a broker. I said, yeah, bring it out. Broker came in, tying all this thing. I would give them our resume. I said, why don't you go sideline? Let me go talk to him. Why don't you advise him? I don't want to go through you and talk to him. It just makes our life easier. We like it, it's better. So we don't mind having a broker, but I just don't want to go through the broker. Now, if the broker brings me a deal, I'll underwrite it. But happy to say out of my 180 deals, 1 came from a broker. They'll bring me deals, it's just not going to underwrite. Right?
Wow. That's good insight. That was good.
Hey, Wholesale channel survived me for last 2 years, right? For at least 50, 60 properties I bought from all the other wholesalers. So that's my way to take a look at it, right? Okay, but broker have their place. Awesome. Every time I sell it, every time I want to place it, when I get the market feedback, it's fine. So I have a good relationship with 3 brokers that I work with. The handshake is they get 2 dips out of me. When I buy a property, I have to lease. So they lease it for me. I don't even touch it. All right, that's their 6%. When I sell it, they get another 6%. So if the broker is really bad as enough, I got 2 of them that I work with. I said, this is my project. I will hold it for a year and a half, 2 years, then I will sell it. They'll come in, make 6% off my lease, then wait for a little bit, come back and make another 6% when I sell. My ask, when I buy, help me, but don't get into it. So I can save the money, give it to you guys. So we have 3 ways brokers to make money. So all the brokers, I tell them, take 2 shots, right? Leave 1 for me. It's a happy conversation. And it works. And it works. Last time, my biggest sale happened by the same broker. He advised me when I buy, and I didn't want to sell it. He says, tap, Shahriar, I want to sell it. I got a guy who wants to buy it. I said, okay. So I'm extremely supporter of value add. Somebody must be doing something to add value, not just 1 email and not just, property address plus give me 3% and dump all the work on you, right? So that's mine. Okay. So on the rules of engagement, please engage on the phone, but understand a little bit that you are on a first conversation. We got to be a little bit more defensive, which is we have to build the confidence that you can buy the property at the dollar value. Typically, that's where the team comes in, right? 100% of the property that I look at, I can buy jack squat, but I got a team put together. We can buy everything, right? So that's where the team comes in. Okay, so that's what I would say. Back to rules of engagement, building a team is very important. I'll come back to that. All right, so now I'm gonna go to quick valuation and methodology. All right, so I'll give you the key terms, but I'm gonna walk you through first, and then we'll go from there. So whenever we take a look at property, there are typically 2 different ways we take a look at it. First one is a back of the envelope real quick. The back of the envelope real quick, if you don't know anything about anything and you don't want to do any work and just get to it, go to last year's appraisal price, drop the damn price. You're not gonna go wrong with it. Okay? It's just not gonna go wrong with it.
Can you say that one more time? That last year's appraisal price and what?
Last year's appraisal price. Offer that price.
Okay.
8, 9 out of the 10 times, you're going to be okay. And if you kind of get that thing, buzzed a little bit, is in the boundary line, and then you can tap on your team and redo the whole thing and make sure you're fine. Okay. So now the question is, I really want that property. I know a little bit how I do it. One big thing in real estate, on the commercial real estate, nobody works for free. Absolutely nobody. And everybody has to pay somebody to do the work. So get that in your head that everybody must be paid. I cannot, if I am a broker leasing up my property, then I have to realize that 6%. If the AC is broken, I'm gonna go fix it, then my model has to say I'm gonna hire Joe who's gonna go do it. Okay. And if I have a property, I gotta go file a protest, I gotta hire the CPA to do the protest and fee has to go in. And everything on a retail price. And that's what it is. So first thing you ask, if something happens, there's a term called T12 or trailing 12. Or T3, which is trailing 3, right? Which is give me last 12 months of expenses. That's all we ask, right? That's all. T12, then or financial, or T3 is trailing 12 months of expenses. Trailing 3 months of expenses, okay? So that's one. And the second thing that we ask, or we wanna know the pricing. The pricing depends on the NOI, net operating income. Doesn't matter what we do, bank will come back to this one, you will come back to this one, I'll come back to this one.
So can we break down NOI real quick?
Yes. So I'll use the single family perspective, right? I will go down. On a single family, you collect the rent. You just collect the rent. As an owner, we got to rent. In a commercial time, we call it a gross income. On top of everything, the maximum you're gonna get gross income is same as rent collection. And in the residential, we pay tax, we pay insurance, and we fix it up, right? And after paying everything else, whatever is left over, that's your net operating income. Very simple. You collect the check, you pay for everything, whatever is left over, that's your net NOI, that's your NOI. And your pricing will be based on the NOI. Different than we kind of break out from the commercial, right? Now, on the commercial side, remember there's 3 buckets: tax, insurance, and repair, right? On the commercial, we ask, is it lease? The answer is yes. Then you ask what kind. Is it a gross lease, or it's a triple net, or it's a double net? The triple net means is that one person could say on a house, my rent is $100. I mean, let's say $1,000. We all know that's a gross rent, right? Even though we don't say it, because I collect 1,000, I pay everything else. On a commercial, it could be $1,000. Then you ask what kind. If there's a gross, then you know in your model you have to factor in the cost, right? If there's a triple net, then you ask, is it net of tax, insurance, and repair? Some of the assets where seller or the tenant will pay for the repair up to some dollar amount, they will pay for the insurance, and also they will pay for the property tax, and they're going to cut you a check after everything. So tax goes up, good luck to them. Insurance goes up, good luck to them, right? Or it's a residential, good luck to me, right? So it's a slightly differently, right? And on the reverse, your cash flow is fixed. Your NOI is fixed because tenant is giving you one check, right? That's the difference. So we have a question. Michael Blank or Spencer Burton. I don't know Spencer's model, don't quite ring a bell, but I know Michael Blank's. I don't use the Michael Blanks. I use something called Synthesis. That's for the apartments. And this one, I found it online on the screen. Then I customized a little bit else for me that I use for everything. For triple net, for row house, for any kind of apartments that we have, it kind of works out. So from 5 unit to 100 units apartment, I'll plug in some numbers here, like up to 100 units. It's going to calculate everything for us. Okay. But again, I don't want you guys to do this. This is not your role unless you're extremely advanced, right? When you are coming in, typical will be, hey, I'm calling everybody and I found a seller who got a commercial property. And then I got to ask him what kind of building he has and what is his, what he was talking about is 212 or financial looks like and rental. Okay.
Yeah.
That's all.
Then
And
from there, yep, and you just get the key information.
That's right.
Yep.
And if you really want to know how far you're at from the price, you see the asking price and you see the appraisal price. Further you go, chances are it's going to be tough.
Are you getting estoppels?
Yes, it depends on the type. If that's a triple net bonds, we do it. If that's apartments, we don't. There's no point.
Can you give like a brief description of what a estoppel is?
Yes. So let me walk you. I'm going to give you an example. What is it? So in a commercial space, everybody's fighting for everybody, right? And I have a property today, and I sold it to Daniel, and Joe stays in my property. Joe and I could be fighting for something else. Maybe his tax was late, I got a bill, or he didn't repair, I wanted to repair. On the contract says repair, he says he doesn't think contract says repair, so we are fighting. Daniel buys in. And if I don't resolve the fighting with him or the conversation with him, then that may trickle into Daniel's ownership. A estoppel certificate, it's a certificate with like a small form that the tenant fills out stating that he doesn't owe anything to the current owner, he or she, or the tenant will not and ask for anything from the new owner. So it's a clear separation of ownership. It's a clear transfer of issues or no issues per se.
And it's used to check, make sure the seller ain't lying to you and the tenant ain't lying to you. So if both of them agree on what the terms are of what their lease agreement is, they know everybody's on the same page. So you're not buying somebody that's behind on their rent and the seller's telling you they're caught up.
Yeah. And this becomes prevalent when you go higher in the prices. And so most of the time, people who are talking to us directly, they will not offer a estoppel or something like that. You can go ask for it, but if you get to the high-end stuff, expensive stuff, then it becomes more and more prevalent.
Gotcha. Appreciate that.
So again, on the valuation, So if you want to bring your team, going back to what I said, the valuation takes time. Doesn't happen. It takes, for me, it takes 2-3 hours to underwrite something. As fast as I can get. Apartment takes about a day and a half, right? Because it's not just plugging the number, it's understanding the story behind it. So the best place to tap it into somebody else, respecting their time, it's you get the T12 or the financial, you get the rental, and you get a price out of it, right? If you can get those 3 data points, then you can say, hey, versus appraisal, that, hey, team, this is what I got, and this is what it is. That's a very good point to start. It's a very good point to start. And whoever plays in the local market, they should take a look at it. If you give me an apartment and you tell me what the rent roll looks like, dollar per square footage, and then you give me an idea of dollar per square foot asking price, I will know right away whether something go or that's a no-go, right? That may be different in Dallas. That may be different in, so, but again, if you get those, it's very important, right? On a warehouse, dollar per square foot building going rate in Houston could be different than, your Dallas, but if you give me the rent roll, I know exactly what kind of a lease that you have based on the price. We can give you directionally to go or no go, right? But again, that's not, you kind of set up the team to do the right thing for you, so you go negotiate, right? So that's what I would say, team is very important in this case. But again, please don't, if we decide that, sometime on the wholesale model, I want to get the list, I want to call, I want to negotiate, I want to put the contract, I want to open the title, but then I find the dispo side as well and the whole thing. That whole process and a commercial, it's crazy. I have 7 people team. I got 1 MBA who works for me. I got 2 accountants who work for me, but still that's crazy. So if you want to save all this misery, find a team and just stay in one path. And then over time, you're going to grow, right? If your avenue is deal making, which is getting the leads in, get the lead in. If your focal point is the valuation, then just do the valuation. If you're looking at the dispo, then only go for the dispo. Don't try to go everything. Yes, money is out there, but what I said before, it's a team effort. Everybody, and nobody works for free, right? And you kind of throw it your way out. So the apartment, when I buy, I'm part of a group. One of the groups that I'm part of is called Jake and Gino. They have 7-8 guys in Texas. All they do underwrite. So their goal is that in their life is right now, if I see a property, how fast can I underwrite and how fast can I tell the deal is a go or no go? That's all. And that's an art, right? So what's up?
Hey, are you seeing an average? I know some markets are different as far as in the commercial side. From what I've been doing, I've been looking at like last year, I would say like a deal would be like right around 60, 65 a unit. And now I'm seeing in the different markets that it's between about 79 and up into the 100,000 per unit, depending on the market it's in, right? And I'm wondering if there's something that you're seeing a little bit different.
Different in terms of price increase, or different in terms of the competition, or deal coming in, or what?
Well, the average sale price, like
right. Okay.
like with the referring to the NOI and the cap rate.
Got it. Yes, everywhere in the U.S. price went up. That's because of the inflation, right? Everywhere. Multifamily caught on a little bit more, right? So stuff that used to trade for 70 grand right now, I'll expect 80, 85 grand, just because doing nothing, absolutely nothing, same NOI, everything else. That's also because interest rate was in a good spot. Now rate is going up. It's going to eat up my NOI. So we're expecting a price adjustment as of now going through. Rate just went up 2 days ago or last week, right? So whatever price increase that you saw in the last 6 months, we're expecting a price adjustment from the 6 months a little bit more. But you're right, everywhere price went up. On that note, caution. Do not take a look at cost per unit. That's a very flawed way of taking a look at it. Because cost of unit, I may have 1,000 square foot per unit. Daniel could have 500 square footage. San Antonio, the whole city, I feel like everything older, everything is like a 500, 600 square footage. Come to Houston, 1,000, 1,200. So dollar per unit doesn't be two things. So you need to go, and dollar per unit is a good thing, but second question right away, get to dollar per square. Right? It's a very good way. That way, it doesn't matter what the size is. is dollar per square footage. The lowest level of granularity is the square footage, right? Then you can really see what it is. But you're right, everywhere price went up, everywhere. Good question.
Thanks, man.
Any other questions?
I don't see any right now.
Okay, perfect. So I'll talk a little bit on the lending. On the lending, at least on the Houston market and the Dallas market, on the industrial space, if the building is empty, we're not seeing loans being given out. But majority of the bank will not give you the loan. So you have to have something else for them to give you the loan. They're looking at it, call it speculative play if the warehouse is empty, right? So when you price it, understand that or have that information in your arms. So when you go negotiate as such, right? On the apartments, we're seeing loans. In my mind, apartment is 5 units or higher, not anything less. 1 to 4 is residential, right? 5 or higher, those apartments. We're seeing a blend of lending as well, but very cognizant about the interest rate and impact to that for price. Let me see what I had. Okay. Last thing I want to cover today is the building a team, right? Building a team, and I'll pull up a presentation for us, take a look at it. Then I'll walk you guys through how to build a team or how I went about building a team. I may have shared this screen before. So most of the time, whenever we run the evaluation process, that's the sequence of what happens. We got the engagement, we got the underwriting, got the negotiating, and the capital acquisition and asset management. I'll give on a study. We found the property from another team who does direct, to seller, and it came out to be a $5 million asset. And we did the first underwriting, right? I led the way to the underwriting. And then it was in Dallas market. I'm not familiar with it. I tapped into my partner, Sanjay. He's from another deal I work with him. He took over the contract and negotiating. Now, we have to think it through on the larger assets. You got to open up 2 or 3 LLCs. You have to hire attorneys. You have to talk to the lender. And if you take a loan for certain lenders, before you start the lending process, you got to pitch in a 1% down payment and a good faith to a lender on top of the seller, on top of the attorneys, so that he's going to factor in all the prices and see what they look like. Interestingly, on a $5 million deal, we thought we have to raise 1.5, 1.6, but lender just sent an email out and said, no, I love you all, but don't love you that much. You need to raise $2 million. So on a $5 million deal, you got to bring in $2 million. Now, we got to go take a look at it. To raise $2 million, how many people we got to talk and who's going to be the investor works, that kind of stuff, right? We got to go find the equity partners. And that's how, then the acquisition and other process and that. So from your end, when you build a team, understand exactly where you want to go play and build a team around that thing. This is the entirety of the value chain. Some people could say, I just want to reach out. And this is where my bus starts, and this is where my bus stops. So I want to know everybody who does the market assessment and let them deal with it. Somebody could say, I have tons of money. So I want to talk to people who are doing the underwriting. Somebody could say, I am an asset manager. I want to get to know who owns the assets, right? So building a team, knowing your specialty, how you fit in is extremely important. So if you're land, you're texting on a land, you're here, you want to stay here, you want to master it there. So your expertise will be, let me talk to somebody, ding, ding, it's a commercial. I'm not going to make an offer on the phone. And then let me ask those 3 things, and I will tap in Daniel or Anthony or DeAndre or Shahriar, and they'll come back and do the work for us. Any questions, any comments, thoughts on this one?
I don't see any questions on this one.
Awesome. Okay, so back to it. I think for today, I gave you guys a lot more information.
All right. That was amazing, Shahriar. We're getting a couple minutes early, but we got it covered. I think you covered a lot of different stuff. Let's kind of reaffirm if you're going after commercial, T12, rent
I want to
roll.
save another one for the next session. My goal was to kind of go through, we can underwrite.
Yeah, that stuff's priceless. And that shows you where you can come in as a wholesaler just by getting that prime information. If you can get a price out of the seller, the rent roll, and the T12, that's all you need for us to do the underwriting. And
on the wholesale side, I will extremely cautious. We call it wholesale life cycle, right? The moment I have the contract, everything is on my feet, right? I own every single thing. And when I get out the contract, when my time is running out, I'm desperate. In a commercial, there is, people got to do the work and they have to take the loan, right? And they just need some time. So you don't want to push for the extremely highest price whenever you have done a deal before. You want to strike a chord between a balance. Who have worked with you before, has the caliber of take a deal down at that size, so you qualify them and you get them cut loose early on so they can do the due diligence, they can deploy the bank, and they can get to work, right? So I would say be very cautious about it. That it's not land or house price, somebody will drop 300 grand cash, pick it up, right? So cognizant about the timeline.
What's the timeline for getting under contract? Are you doing like 60 days?
Okay. So question is going to come, your due diligence. Typically I do 20 days. Then we have closing. Typically it's 57 days. Bank says 55. I kind of make it a weird number, 57, not 60, 57. And then typically it's one extension for another 20 days. So the way it works, you put your earnest money here. After the due diligence expires, it goes hard after due diligence time. And usually here, extension, this is and hard money as well. That means you don't get it back.
Hey, Shahriar, I have a question. This is DeAndre again.
Hey.
I just want to ask this question from perspective. So I'm a land wholesaler. I can roughly do somewhere between 8 to 10 land deals a month, and I can do it all virtually from, a different state. Now, when it comes to commercial, can I do 8 to 10 commercial deals a month, and can I do it virtually from another state?
Not the way your team is structured today. Absolutely you can, but not the way your team is structured. You have to redo your entire team. You have to bring in a different set of people with a different expertise, then you can do it.
So it's possible, it's just the team would have to be different. It had to be,
That's right.
Yeah, okay. Makes sense. Okay.
And also because a couple of things. Number one, commercial target audience are smaller. On top of that, they are sophisticated, so the people will talk to even smaller. And then deals underwriting takes time. So you really slow down your process. So if you really want to do 10, then you have to marketing almost 10 times of whatever you're marketing on the land side, because the population and willingness. So commercial just takes a long time.
Yeah, that's why I asked that. That's why I asked that question. Can I do 8 to 10 commercial deals a month?
Of course you can.
Bigger, it takes longer.
So you gotta do more of it. You gotta do more market of it, right? That's it. You're in control. Hey Mitch, you got a question, buddy?
Yeah, real quick. I'm kind of new to. I was looking into a little bit of commercial. I actually have a buyer that's looking for a warehouse. I'm in Atlanta, Georgia. I was just trying to think of good places to start looking. I guess I've never heard of LoopNet. I was just thinking there's some other places I could look for a warehouse that they're looking for.
And before I give you the answer, you're gonna go build a partnership with somebody who wants to buy it, but from what perspective? As a wholesaler or as a broker? Because you're that person, wholesaler, okay. Then you can't touch on the market though. But having said that, keep that in your mind. So it's gonna tell you where to go. But a couple of places you can go. You can go to, we call it LoopNet, right? That's one place, you got everything there. Another one is called Crexy, your Crexy.com. So between a Crexy and a LoopNet, you'll find everything what's on the market.
So
most of the stuff, yeah.
What was that last one?
CREXI, Crexy.
Okay.
Now there's another different classes of larger brokers. They tend to have their own website. If you go to larger apartments, JLL, Marcus and Millichap, a bunch of other companies, they don't even list anything on Crexy or LoopNet. They have their own investor base. They have everything else. They manage everything. They're like a wholesalers under the name of broker type name for them, right? They don't buy it, but they are keep calling every single day. They're going to wake up and call every single property owners on that market. It's like a boiler room. So they're going to call them. They're going to say, I'm going to sell your $2 thing with the $2 billion. Give me the contract. And they have a big distribution list. They're going to go and sell it. All right. So it's a wholesale. I mean, you look at a wholesale, we call it wholesale, but they are doing the same thing what you are doing, right? But they're sophisticated and their brand is out there. So for your end of it, going to Crexy, going to LoopNet, I know you don't want to hear it, but chances of finding a property than double flipping it to somebody who's already in the market is tiny. But
Please
then you go find
please
jobs.
don't do that.
Look, there are some wholesalers. They're the big one. There are two in the Houston market, Northwestern, and there's another one. They're in Dallas too. They're pretty big. They will put properties from the MLS under contract. Then they'll sell you on an investor database. But they go after that first time once, and they go after the speed. And you kind of sort of know who they are, right? All these wholesalers send me emails. I know which wholesaler underwrites which way. I know whose deals are garbage. Absolutely garbage. Don't even spend more than 2 seconds on it. I know there's some wholesaler that deals are badass. You know they got a good deal. So you spend more time on it. So what I would urge, don't be those guys. Be the guys really putting the time and getting a deal done. So you're doing the work, and creating value for you and for others. There's a wholesale outside. We know they will take the life out of you, and they're trying to be wholesale, and they're trying to be retail customers, right? And some of us, we buy at a usual base. You can't. So my ask here, you got a good team, Hive Mind, you got some really awesome mentors. You got DeAndre, got Daniel, Anthony, all those guys. Learn how to negotiate, bring good deals. Don't bring anything just because,
Great question, Mitch.
Okay, thank you. Appreciate that.
No problem. So that's all I had for today. So I appreciate you guys' time, and you know where I'm at. Just find me on the Facebook or website, or just reach out to Daniel Anthony. That's your first person to reach out to. Then we can, rest of the people will show up behind them.
Man, Shahriar, thank you for today. This is another home run. I think you covered so much just in the last 2 calls. I really appreciate it, man. I hope everybody learned a lot. See, the reason why I show up to these calls is because I'm asking the questions I want to know. And commercial, I know a little bit about it. I'm learning every time I listen to these calls myself. So there's an opportunity for you to learn and expand on your knowledge. So don't miss the opportunity when it comes up. It may not come up again, right, Shahriar?
Damn. Next one, buddy. Next one.
So we appreciate you, man. Appreciate everybody coming out, man. We had a good turnout today. I hope you all learned something today. Even DeAndre was here learning.
I know DeAndre. The DeAndre's asking me questions. I was humbled. Thank you, DeAndre. But I look up to you for all the texting, what he does. Seriously. I can look at his process. I was like, man, you guys are just killing, you're destroying it.
Yeah, it's amazing. So we're all here to help each other. We're all here to help each other learn.
Hey, Daniel, I'm trying to figure out what's wrong with my eyebrows.
Oh, I don't know, man. You gotta just cover them.
Hey, man, depending on how I answer, as long as you don't replicate what happened with the Will Smith, I'm not going to say anything, That boy went like something else. I thought it was fake first. And I was like, God, no, it was real.
That's so weird. What are you doing, DeAndre?
I'm not doing that on purpose, man. I don't know what's going on.
You have a filter on. We're going to leave this in for the bloopers.
The show is sponsored by The List Guys. Do you need more leads in your local or virtual market? 1 in 10 small businesses don't invest in any kind of marketing. The List Guys have over 35 plus list types to choose from, and you can mix and match any list or criteria. We also use the skip trace list and provide up to 7 numbers and email addresses. Every list you purchase will be scrubbed against previous purchases. The List Guys are here to save you time. Contact the List Guys today at www.1listguys.com. That's www.1listguys.com.
We appreciate everybody coming out. Thank you, DeAndre. Thank you, Shahriar. Next call is Thursday. We'll see you all then. Appreciate everybody coming out.